trendline breakout strategy. When the price is trending in one direction, it will never break its trend line. But when the price does break the trend line, it can indicate a strong reversal. If we catch the breakout of the trend line, we can virtually ride the next trend. This is the reason why trendline breakouts are very popular among traders. They give the opportunity to enter the trend at an early stage. But the problem is, a lot of times, the price does break out of the trend line just to reverse and resume the trend again. This type of price movements are called as fake outs. Fake outs can be detrimental to your trading account and can result in loss of capital. To avoid getting trapped in fake outs, we will use the volume indicator. The volume indicator simply shows the amount of shares being bought and sold during that particular period of time. We don't need the exact volume of each candle. Instead, we will just look at the size of the volume bars and compare them with each other. Let us look at a trade example to understand the strategy. Here we have the Apple stock on a 15-minute chart. As we can see, the price has been making lower highs. But it is facing difficulty in breaking below this price area. Therefore, we spot the swing points on the chart and plot a trend line connecting them. Now we want to see the price break above this trend line. Such a breakout would indicate the start of an uptrend. Let us zoom in to see the candles clearly. Here is the same trend line that we were looking at before. Look at this candle. Here we see that the price has gaped up and broken the trend line. But at this point, the price could easily reverse and continue the downtrend. To confirm a strong breakout, we want high volume on the candle that broke the trend line. Again, this is the candle that broke the trend line. Now, look at the volume. As we can see, the volume on this candle is relatively higher than the volume for the previous candles. This indicates that the breakout has been backed by a large number of traders. And such breakouts have a very low probability of failure. So, we buy the stock at the close of this candle. We will place our stops below the low of the trend line. And we will place our targets at 2:1 risk to reward ratio. As you can see, the market gave a strong up move after our entry. Let us now look at a sell trade. Here we have the GBP/USD pair on a 15-minute chart. As we can see, the price has been making higher highs and higher lows. Rather than a trend, the price movement looks like a range that is slightly sloped upwards. But anyways, we create a trend line by connecting the lows. And now, we will wait for the price to break below the trend line. Here is the breakout. Here we see that this candle closes below the trend line. Look at the volume on this candle. As we can see, the volume is rising as the price breaks the trend line. This is a clear sign that the down move is being supported by the volume. Therefore, we sell the pair here. We will keep our stops above the trend line, and we will keep our targets at 2:1 risk to reward ratio. As you can see, the price sees a strong sell-off after our entry. This brings us to the end of this video. In return, I ask you to subscribe to our channel so that you don't miss on any of our new videos. See you soon.